Welcome to the Vaughan Nelson podcast. With me today is CEO and CIO Chris Wallis. Welcome, Chris.
Thanks, Dan. Great to be here.
Okay, Chris. Well, looks like this might be the last one of the year for 2025. And looking back on 2025, right, we saw tech. It really continued to perform well. And one thing that we maybe might note though is we actually finally saw the market broaden out a little bit, right? And just by way of proxy, might be looking at something like the U.S. small cap world. They had fairly comparable returns to what we experienced in the S&P this year. And even the non-U.S., the outside the U.S. markets, they did phenomenally well. Actually, outperformed the U.S. for the first time in a while. So, is that as a backdrop? Any sectors that you think that people might be ignoring, or maybe that they're underweight, that are attractive as we start to head into the new year?
Yeah, look, I think we've seen a broadening, which makes a lot of sense. I think the one area um, with the work and looking at industries and capital allocation in areas that may have been starved from capital, and where you may see a response, will probably be the energy sector. We've continued to underinvest globally in energy, and while energy prices are weak now, that in and of itself sets up for a recovery in energy prices later as we see capital retreat and investment retreat. So that's one area where we're looking to increase exposure. Timing these is always difficult, but that's probably an area you want to lean into. And while tech has been strong, it's been an area that, and with the price strength, we've kind of been de-emphasizing and taking capital away. And I suspect that's what the broader market's doing as well, whether it's taking out of the U.S. allocations and moving to the rest of the world. But any broadening of market participation is certainly healthy. But I do think energy could be really interesting as we get into the second half of 26 for sure.
Yeah, and then thinking about 26, front half, second half. Let's maybe touch on as much as you like. But
Yeah.
what do you see the setup is as we do head into 26, and maybe more interesting, anything that you expect to see here in the near term?
Yeah, look, I think the fundamentals are going to continue to be supportive. We're going to have to gauge to what degree that's been already been priced in with the rally we've seen since August. I'd say the valuation gaps that existed since August have been closed, meaning the market priced in that we're not going to have a recession, that inflation's not going to be a problem. So now we've got to really get into, well, what are earnings going to be in 26? And quite frankly, I think really 27 is going to be more important. We had a fairly benign inflation print this week. I think that's going to continue. So I don't think inflation's going to be a headwind. We're going to see economic fundamentals continue to improve in the US and in certain pockets outside of the US. The US consumer is going to feel much better. The big decline we've seen in energy prices and gasoline prices is helpful. We're going to see a reduction in tax withholdings early next year, which is going to kind of boost household income. Tax refunds will be fairly robust, which will also help boost after tax income. So I think fundamentals are going to be fine for the next 6 months. I think the market's already front running that. I think investors are still a little bit offside. So there's going to be some chase as they come to that realization with the announcement of Q4 earnings and guidance and outlook. Now we are moving into the season of a midterm election. I would expect some intra-year volatility. So as we continue to maybe melt higher early in 26, it may set us up for a sizable correction kind of mid-year. And then at the end of the day, we're going to get the typical reaction and the seasonality. So I don't expect, borrowing something out of credit or elsewhere, I don't see fundamentals as a big headwind. I think the biggest headwind is just valuations have expanded and the liquidity that's available is now being redirected to the real economy, which means it's going to come out of financial assets, which will create some volatility and a bit of a headwind, but should be a fairly robust environment to do some stock selection.
Good. Well, let's hope it is
Yeah.
for everyone.
Sure.
Good. All right. Well, that's probably it. That's gonna be a close on 2025. So, thank you for joining us all these times, and we look forward to what we're seeing here
Yep.
in a few weeks.
Sounds good.
Very good. Thanks.
The views, information, and/or opinions expressed during this podcast are solely those of the individuals involved and do not necessarily represent those of Vaughan Nelson and its employees. Vaughan Nelson does not verify and assumes no responsibility for the accuracy of any of the information contained in the podcast. The primary purpose of the information, opinions, and thoughts presented in this podcast is to educate and inform. This podcast, or any podcast in the series, does not constitute professional investment advice or services, and any reliance on the information provided is done at your own risk. Past performance is not an indication of future performance. By accessing this podcast, you acknowledge that the entire contents of this podcast are the property of Vaughan Nelson or used by Vaughan Nelson with permission and are protected under U.S. copyright and trademark laws. Securities discussed within this podcast may be held in the Vaughan Nelson strategies.